As the world's investors brace themselves for the outcomes of the European summit, which takes place on Thursday and Friday, news out of the US overnight was not too good. American consumer confidence fell again, down to about its lowest level in the last 5 months. And coupled with that, real estate prices for residential homes continued to fall. Possibly a silver lining though, the rate of fall has actually declined over the last couple of months, and investors are picking that it has potentially bottomed out. Looking at Europe, Spanish and Italian bond yields continue to spiral upwards. In terms of Italian 2-year government bonds, their yields have increased by more than 88 points over the last couple of days. Better news for the Dutch, however. Dutch borrowing costs have actually started to go backwards, and on top of that, GDP data for the first quarter of the year has indicated that the Dutch economy actually grew rather than shrank. So looking at markets, the Dow Jones was up slightly around 30 points, but it was a mixed bag on European markets, although they traded relatively flat. In terms of currency, it was risk on. The Kiwi climbed against most of its major trading partners, going through 79 cents US. Recent data around cattle kill in the US shows us some interesting trends. Beef kill in the US for the month of May was around 2.6% lower than it was in the previous year. And this highlights what we already know about the US beef cattle herd, which is its lowest level since the 1950s. However, some interesting statistics when compared to feedlot beef. Now, beef in the feedlots effectively feed through into the freezing works, and you'd expect that the two would be relatively strongly correlated. However, the fall in terms of feedlot beef has been nothing like the fall off in kill. The reason? Apparently, the feedlot information is gathered in terms of operations with more than 1,000 head of cattle. And what's actually been happening is that in the last couple of years, those operations have been gradually getting more and more at the expense of smaller operations. So what we've actually seen is more beef cattle added to the feedlot numbers than in previous years. So the two big takeouts then from the data. Firstly, beef production in the US is significantly constrained, and secondly, cattle production in the US is not immune from the same sort of consolidation issues as in New Zealand. What's happening is the larger operations are getting larger, and the smaller ones are being consumed by the larger ones, just like the beef they produce.